Hey, so I wanted to check in on Intel. Last time we looked at them was about a month and a half ago on June 14th. They were trading at $33. Now it's at 35. Uh, they came out with their quarter earnings. So we're going to start with that. Then we'll check out what they're guiding us towards. We'll look at the news, just to understand what's causing, the change. It's very small, 33 to 35. But surely something's happened between then and now. Uh, and then we'll go into technical analysis just to see if now is a good time to buy or what is a good time to buy. So let's just start off with the quarter earnings. And this kind of gives us some foresight into the future too. So we'll flip back to this first slide. But what they did, right down here in the bottom right, they were expecting to do -3 cents per share. They ended up doing 13 cents per share. No one, again, it's very small figures. So in terms of like money, they didn't really beat by that much, like 16 cents here. But in terms of percentage, I mean, they crushed it. They 500%, they're saying. Uh, I, so clearly they thought they were still going to be in the negative. They're not doing great when you look at year over year, but yeah, the bottom line they did turn a profit. So we'll look into it further. Um, and I guess before we move, no, we'll just move on. Okay, so for the revenue, it's at 12.9 billion for the quarter. They said this is due to a softening CPU data center market and also lower demand across product lines. We'll go into the product lines after this. Gross margins, and you'll just see this pattern here. So we have revenue on the far left, that went down. Gross margins, in terms of GAAP, very close, went down about 0.5%. In terms of non-GAAP, which is the number we're looking at, that went down about 5%. Uh, so that was a pretty big hit. I'm hoping to see that climb back up. Then earnings per share, we mentioned that earlier, they put up 13 cents. And then cash flows, negative 11.5 billion. In terms of GAAP, it's still a profit, but non-GAAP, they spend a lot of money. I have to imagine it's due to, if we look at the bottom, these plans to expand our manufacturing capacity include an agreement in principle to build a 25 billion chip manufacturing plant in Kiryat Gat, Israel. Uh, let's see, signing a revised letter of intent to increase our planned investment to be more than 33 billion in the Magdeburg, Germany. Plans to invest up to 4.6 billion in the assembly and test facility in Poland. Clearly, that's a lot of money, and that's why we're seeing that negative amount there. Uh, so another way to look at the revenue here, we have basically just a summary of the previous sheet, but again, a little more detail. Net revenue, there's that 12.9. For the 6 months, it's about double of this quarter, so 24. But when we look at the 6 months of 22, big drop. Again, we can see a noticeable difference in gross margin. Again, we saw that drop as we saw in the previous slide. Some other things that weren't on the slide are restructuring and other costs. It looks like before last year, it was actually negative, so they made money there. But this year, all of a sudden, they're spending money. I think just restructuring last year, I think that had to do with they cut some subsidiary type companies that were attached to Intel. And so because they made those cuts, they were able to save money. This year, they're working with what they have, so they're spending money. Gains and losses on equity. Last year, they were up a lot. Now, it's still up, but not as much. Again, I'm pretty sure that relates to the subsidies that they had before. Uh, them cutting that meant that they didn't get the profit in this case. If that's not it, then whatever investments they had, they just didn't do as well in this quarter. Net income, negative. Negative for the 6 months, but this is what everyone was kind of keying in on, is the past 3 months up. And this, I believe, is $1 billion. So they were up $1 billion in this recent quarter. We thought that would happen maybe the end of the year. Certainly, like next quarter was more expected. So to get it now, a lot of people feel like that's the turnaround. We looked at TSM. TSM is like the major chip. I guess Intel has multiple streams, but until I would see TSM turn around, that's when I'd be like, okay, Intel is also good. But again, Intel's in a different variety of fields than TSM. So overall, this is a good thing to see a big company like this turn profit this early. Again, 6 months though, negative, but hopefully this carries into the next quarter and we finish the year strong. Down here at the bottom, earnings per share, we pretty much covered that before. Again, negative for the full year, but if this trend continues into next quarter, hopefully they can end on a positive note. Next, we have just a different view of their net revenue, but in terms of revenue streams. So the big items that I wanted to point out are their notebook sales. That is their biggest revenue stream. It is down about $3 billion. Then we have the data center and AI. Everyone's been talking about that so much. Even that's down for the full year, down about $3 billion. We would have thought with all the buzz that's going around, it would have been better. So hopefully it turns around, but still, as of now, it just still looks bad. And then network and edge, that also, again, it's a smaller revenue stream, but third largest, really. Or I guess you could say fourth largest because desktop. But still, a significant portion of revenue, even that's down, not 50%, but about 40-ish%. So hopefully we can see it pick up again next quarter. We can also look at the monthly breakdown between this 3 months. I wish they had last quarters. That would have been helpful in this case, but you can kind of do the math here with subtracting out. It seems like it is picking up, though. Business is picking back up. Just slightly, though. Moving on, balance sheet. So first thing we have to look at is just the current ratio. So current assets, 43 billion, current liabilities, 27. So they have more than enough money to cover their current liabilities, current expenses. A decent amount of cash, 8 billion. Definitely enough to cover short-term debt and most of accounts payable just on the spot if they would need to. So that's nice. The other two things we want to look at are property, and then we have debt right below current liabilities. Property's at 90 billion, close to 91 billion. Very interested to see how high that number goes in the next 3 years. I'm guessing it's going to be around 130, maybe 140 billion. Debt, that's going to be the catch. They're going to get all that property, but debt's only probably going to go up to maybe 70, Yeah, property's probably going to go up about 40 to 50, maybe even 60, but the debt should only go up about 20 to 30. But yeah, I'm expecting those numbers to balloon up. Moving on, statement of cash flows, we have 6-month comparison. Net cash provided for operating dropped significantly, so point that out. We had additions to property, not by much, but again, I'm pointing that out now because I'm not sure if it would all just kind of hit all at once. I'm kind of doubting that. I think just one quarter it might be, say, like 20 billion, maybe 23, and it'll just kind of space out with little bursts like that, as opposed to just one quarter where it's just 50 billion. I don't think that'll happen, but I think in total we'll see an increase of that amount. Just again, it might be spaced out over 2 years' time. Repayment of commercial paper, they didn't do that last year, but they're paying off, I guess, short-term debt or something. Proceeds from sales of subsidiary shares. So again, we mentioned that earlier. They had all these, I don't know, investments, they're cutting those, so they made some money off that. And then they issued long debt. They didn't do that before, so they're taking funds. I guess that has to do with the property. Maybe that's just how they're labeling it. Uh, but overall cash flows, obviously the big concern would be the operating activities. But again, to see that it's already positive when we expected it to be negative one more time, that looks good. So now Q3 outlook. So they're projecting between 12.9 and 13.9 billion. We're just going to flash back to that first slide. So they're putting in 13.4. That's roughly half. I think that's fair to say. If we skip back forward, 43% margin. That would be phenomenal. Because again, if we skip back just a little bit, they dropped to 35, or you could say 39. Even if you take the 39, close to 40%, to go up 3%, I mean that's $3 for every $100 you make. So it's a small percentage, but it can add up very quick. Earnings per share 20 cents. That's what they're projecting. If we skip back to the beginning, they're saying 21. So they think it's going to be a little bit higher, but I guess they have faith in what they're saying. Current year probably is on pace, I would imagine, especially if they can finish out the year with 220s. They should be very close to that, or at least close enough that it's like I wouldn't sell or anything like that. But okay, so that's the Q3 guidance. Yeah, let's pivot on to some news. So what's just been going on with them? I wasn't able to go back the full month and a half. There was just too much information that it cuts me off. So I went back as far as I could. The plan is to start looking at this one a little more frequently. But anyway, so the news. So chip CEOs, this is going to include Intel's Pat Gelsinger, is to meet Bernard and Sullivan over the China restrictions. So Pat visited Beijing earlier this month to show off his company's latest AI chips, counts the nation as his biggest sales region, with China providing about a quarter of its sales. So that's the big concern, I guess, between the two parties, because the U.S. has these sanction type things on China, or like restrictions on sales to China. And so the worst case scenario would be Intel, they would just prevent Intel from entirely selling it to them. So worst case, they would lose about 25% of their sales. So this is pretty important for this company. And we're going to touch on that. This was just like, hey, they're setting up a meeting. So we'll actually cover what that meeting was about. But before we get to that, apparently the state of Ohio, that's one of their campuses where they're building a manufacturing plant. So because they're building such a large facility, the state of Ohio is going to invest $90 million in transportation improvements for the area surrounding Intel Corp's future campus in New Albany. That's quite an investment for this facility that they're building there. But next we have Intel and Asus. They have agreed to a term sheet to take Intel's Nuke Systems product line forward. The term sheet basically allowed them to agree to manufacture, sell, and support the 10th to 13th gen Nuke system line. So we'll see how that plays out. That one's interesting. We're going to bring that one up a little bit later. And but yeah, just keep that in mind. Nuke, they agreed to terms with Asus. Next, we have the CEOs urged U.S. to study impact of China curbs. So they actually did meet, and basically the takeaway from Intel's side is Gelsinger told Sullivan, this is the Secretary of State, that further restricting what his company does in China puts at risk a key Biden policy of bringing back chip production to the U.S. Without orders from Chinese customers, there will be less need to go ahead with projects such as Intel's planned factory complex in Ohio. We'll of course follow that to see kind of just how that evolves, the China situation and any restrictions. But moving on, we have Intel accelerates the AI development with reference kits. They're offering 34 open source AI reference kits that enable developers and data scientists to deploy artificial intelligence faster and more easily. Interesting. Next, we have Intel and Erickson are going to expand collaboration to advance next-gen optimized 5G infrastructure. That's one of our buzzwords, 5G. So Intel's to manufacture on 18A process technology, a future custom system on chip for 5G infrastructure for Erickson. Intel and Erickson did not provide details on when the chip will hit the market, but Intel has previously said that its 18A manufacturing technology will be ready by 2025. So 18A, I believe that's one of their new chips. I believe we mention it in this next article. But overall, 18A, I believe, is one of their new chips, ready 2025. The fact that it's going to help 5G, I think that's great. Of course, we'll just follow this. It's a work in process considering we're in 2023. But now I want to move on to, so we're going to kind of touch back on earnings again. So now we're at the point where they actually released their earnings. And I just noted a couple things from the earnings call. So if you've been following Intel for a little while, you know that they created this big roadmap. And so they gave us a little update on that. It says, it all starts with our process and product roadmaps. And he's pleased to report, this is Pat talking, that all our programs are on or ahead of schedule. They remain on track to 5 nodes in 4 years and to regain transistor performance and power performance leadership by 2025. So it's still a long ways to go, but they're on track as of now. I believe this plan started about a year ago, so to hear they're on track is very good. Specifically at each node, Intel 7, I'm assuming that means 7 nanometer, is done. And with the second half launch of Meteor Lake, Intel 4, our first EUV node, is essentially complete with production ramping. Intel 4, the way it's labeled, it makes me think this is a 4 nanometer chip. If that really is what it is, 4 nanometer chip, TSM doesn't even make that. They make a 7, 5, and then they're trying to go to 3. So if Intel comes out with a 4, that's going to be very specific to their products, and it's not going to allow them to intermingle with TSM items. Very interesting play if that is the case. I would need to dig into that further. But continuing on, the remaining 3 nodes I would highlight. Intel 3, again, I think that's 3 nanometer chip, met defect density and performance milestones in Q2. They released PDK 1.1 and is on track for overall yield and performance targets. Overall, like they said, they had that roadmap. They're in line. And product update, good job. Moving on, in addition to executing on our process and product roadmaps during the quarter, we remain on track to achieve a goal of reducing costs by $9 billion in 2023. I believe they mentioned this a little later that currently they're at like $1.7 to $2 billion. They also want to do $8 to $10 billion exiting 2025 in cost savings. So that's very good goal. Remember that $3 billion for cost cutting, because we're going to touch on that in just a second. Before we do, as anticipated, we see the market moving toward equilibrium and expect shipments to more closely align to consumption in the second half. So they are, just like everyone else, they're sensing, okay, we've reached the bottom or we're so close, it's clearly the second half is going to be a nice pick-me-up. And then here, we're circling back to, with the decision to stop direct investment in our nuke business, we mentioned that earlier, they made an agreement with ASUS, but here he's saying they're stop direct investment. So I guess nuke's just on their own, and so they're not spending money. That's how they're saving cost, I believe. We have now exited 9 lines of business since Pat rejoined, with the combined annual savings of more than $1.7 billion. So them cutting that, I believe that's cutting costs. And because they sold it off completely, I think they gained money. So they're kind of getting a 2-for-1 on that. The thing is, they probably don't have many lines left to cut to get that type of transition. I'm not there. I don't know how many investments they have. Intel's been around a long time. They could easily have dozens. Um, but I would imagine they're kind of running low. I don't know. Have to look into that. Next, we have the U.S. lawmakers urge Biden administration to tighten AI chip export rules. So back in October 22, there was rules imposed to. Oh yeah, yeah. Um, okay, yeah. So back in October 22, the rules imposed were two performance caps on exporting AI chips to China. One on how fast the chips can talk to one another, and the second on the chips processing speeds. NVIDIA created special chips for China with lower interconnect speeds. NVIDIA did a workaround, and this was brilliant. I mean, I don't know. It doesn't look good, but it was very clever, and they're following the rules. So just being aware of that. Intel this month also said it has created an AI chip that can be sold in China. So Intel comes up with a workaround, and again, they're following the rules. I'm not sure if they're going to tighten them. We will see. That would be a very big thing because if they do, um, companies are going to be affected. NVIDIA is probably going to be affected the most, I imagine. Intel, it sounds like they came out with an idea. If things change in like the next month, it probably is not going to impact them that much. But the longer it goes on, Intel will likely benefit. So for Intel, we're looking forward to that. Next, we have Intel's new Chinese Chip Innovation Center is a collaboration with the Shenzhen district. This is meant to help domestic startups. So Intel already has a presence in China, and this is their, in a way, giving back to the community. I would view it, allowing just inventors to come up with something, and they're going to help the ones that put in the effort, the time, and create something worth investing in. They'll have kind of first dibs on that, and it's a win-win, I feel. And then the last thing before we pivot into the technical analysis, we have the FlatMax partners with Intel to accelerate AI innovations in Africa. This is a leading artificial intelligence company, this FlatMax. Didn't mention any amount that they're partnering with them, or didn't mention any money, but there is some sort of agreement there. Um, yeah, so let's just move on to the technicals at this point. So again, last time we looked at this was on June 14th, so let's just find that real quick. So that was right in here, I believe, or I guess it was up here actually. 33? Yeah, so we looked at this midweek. So it was in the middle of this green bar, big boom there. Not sure what caused that, but it pulled right back the very next week. But overall, the sentiment it's gone up. It's definitely kind of bounced around. Because really in that week it came all the way up to 36. Here we are at 35. So relatively flat, but for our specific, just looking at the bars, it seems like it kind of stayed flat and then now it's up, I would say. But you can see there's a valley. It's like a V shaped. Uh, but yeah, so we're at 35. We had a buy point at 28, so that is the lower green line. And I guess before we get too far into this, the note we left ourselves is consolidating between 25 and 30 since September. If we go back here, this is September. So yeah, the last time we looked, even though the date says, yeah, I mean, for the most part, it had. I think at this point, we can remove that. It's no longer consolidating there. It's been over a month, and it doesn't look like it's coming back. It looks like it tried to come back got rejected at 30, or got supported at 31, and here we are on its way back up. The one thing I will notice is it seems like a little uptrend's forming here. So I want to draw in something to kind of showcase what's happening here. So this is more or less the uptrend, and I can make this purple. And can I duplicate it? Probably, but we'll just do this. So something like, let me bring that in. Let me clear this. I can probably do this before the next video. But yeah, and we can probably bring that up a little bit if we want. Yeah, just to be safe, I guess we'll give it a healthy range. So, okay. Or we could bring it down lower, be more conservative. Yeah, we'll be more conservative here. So, top of the channel for this would be 36, bottom is 32, and yeah, there does seem like there's an uptrend, and that started back in March. So a little bit late, 4 months to figure it out. Hopefully we can pick up on it quicker. But uptrend since March 2023. For now, I'll just say buy dips, because that's what you do in the uptrends. So yeah, this one's pretty straightforward, I think. So currently it's at 35. The very bottom of the channel, that'd be 32. I'm gonna hopefully circle back on this one in just a couple weeks. So yeah, 33 would be the bottom of the channel. I think we might have found some support here. I'm just gonna bring this up a little bit to 31. So buy point would be 31, and the bottom of the channel about 33. So at this time, yeah, I'll say 33. Resistance, we had 30, which that was that bar we just moved up a little bit. Yeah, we can remove that. We're far past that. Whoops, let me zoom in here. So 30. So that was that green line. We moved that up to show support. 30 was down here to show resistance. We're just gonna move past. I guess we can draw it back in just so we have it there. I'll make it red. But yeah, we passed that. The next point was 45. So 45, so that's the next red line up here. I think if that truly is the case, we have a few spots of resistance that go way back to like 2018. But the point is that's a ways away. So this could be an uptrend for the next like year, and then it might slow down at 45. I'm sure there'll be like sideways consolidations here and there, sort of like this, but the overall uptrend, that could be in effect for probably another year. So resistance at this point, 30, we're past that. I think this uptrend will last a little bit. So I'm going to take that figure out. 45 is still in effect. 52 will also be in effect. But more temporarily, considering the uptrend, right now it would be 36. If we just fast forward a couple weeks, it'd be at about 38. So I'll put that as resistance. Yeah, 38. And 38 will be my primary figure at this time. I can update the date to today. And then again, our note is uptrend since March of 2023. We'll see if this continues. So I guess just a quick recap, and what I'll do is I'll say this one's fair value. So I'll make it blue here. So just quick recap again, we have Intel currently is at 35. I have a buy point at 33, but resistance at 38. And again, that would just be the 2 points between that uptrend, 33 being the bottom of the channel, 38 being the top. We're right in the middle, so I wouldn't be opposed to it at this time. I will probably hold out just to see if it pulls back a little bit, because Intel does kind of move slow. So if it moved back even to 34, I'd probably pick it up. So it's close. But overall, the uptrend since March of 23 and buy the dips, that's kind of what I'll plan on doing. But that wraps this up, so please like, subscribe. Also, if you have any questions, please feel free to ask. I'll do my best to answer them. Or if you just want to add any insights that you saw that maybe I didn't point out, or if you want to correct anything I said, please let me know. But again, that wraps it up. I'll see you on the next one. Bye.